And we're live. Welcome. Wednesday afternoon is a home buyer seminar, of course, whether you're buying your next home or your first home. I'm Bill Gross at Bill Gross Probate, along with my colleague
Patricia Castillo.
and with our good friend.
Shannon the lender.
And we are here to help you, whether you're buying your first home or your next home. We're here to help you do it, learn the tricks, get up to date in the market, where interest rates are, mortgage rates, inventory, what's going on in the marketplace. So let's start off with where's the market at, Patricia?
Well, we're seeing the best rates since February of last year, that's for sure. Um, and I noticed that purchase applications were up over the last week, about 2%. But in some areas, there's still a little delay there. But I think we're looking at a more heading towards maybe a more balanced market right now in some areas because, like for example, in Downey, the homes are all selling at list or just above.
Well,
And yeah, and in Whittier, same thing. These are, hot markets right now.
Yeah, I
So
think the news
yeah,
isn't out yet, and there's no big headline saying rates have dropped. So some people know, some people don't. So if you're
yeah.
watching right now, rates are already dropping right now. I think I'm getting at a 720 FICO, putting
Mhm.
down 3.5% FHA. At par, you're at like 4.875. So that's
Those are the
we're
rates that
now
people have been waiting for, especially for
We are
FA.
now in the fours, guys. We are now in the fours again at a 720 FICO. That's 720 FICO, FHA. Okay, so at today's rate. So if you're watching this, those are the parameters. Obviously, we got to get you qualified to see, but yeah, I'm getting a bunch of people wanting to see their options now, which is good. And the headlines are not even out yet. I think the Fed meeting is going to be what next week. So
Yeah.
let's see what happens. But the headlines are not even out yet.
just kind of shows you where, and again, different loans have different prices. These are the more security prices as opposed to what Shan's talking about, which is the rate you would get if you had a FHA loan. But you can just see, for example, these conventional pricing, 6.11 down from about 6.3 closing last week. And you can see that is the lowest really since we were lower than that in February of 2023 for a slight period of time and it jumped up right away. And again, we were in that range, close to it, not quite even, in April 2023 and jumped up right away. So the thing I would say to anybody who's shopping now, I don't know if it's a trend line that's going down or going to stay down, but you can always lock in, and then if the rates go back up again, you're in a house, who cares? But if you miss it, you have to wait till they come back down again. And so if you're looking to buy, great time to figure it out. Don't, calculate the difference in your payment. Shannon, can you do this for us real quick? If you have a buyer, let's imagine an FHA buyer is looking to buy a house at $500,000
Okay.
and compare a sample rate at what the rate is today plus with the rates where they were, let's say just a few months ago, let's even, really they were a whole percent higher, just a few months ago. What the difference in payment is from those two. Can you do that? Like do one at FHA, you said 475 or 4.875 and 5. What's the difference in payment on FHA on those two loans?
So let's go 500,000, putting 3.5% down. Your loan amount's 482,500. Right now, your principal and interest payment with the MI is going to be 2,817. That's not including taxes and insurance.
Right, just the principal interest
Just
payment on the mortgage, 2817. And what would it be if the rates were, 1% higher?
so that's at 4.875 at 5.875, 3124.
So that's $307 difference, about 10%.
I
You
just
can
I'm going.
I was gonna say you could buy instead of a $500,000 house, buy about a 550 house. So what I'm saying is don't get tripped up over a couple $1,000. Get the deal locked in, get your rate locked in, because this is an opportunity to save $307 from where we were just 2-3 months ago.
I just quoted someone. The guy was looking. He got approved for FHA 1.47. Well, actually 1.5 for a triplex. He's looking for a triplex in Montebello, by the way, FYI, if anyone. And this guy wanted 155 or whatever. And with the payment, he didn't want to go up. And we revisited the numbers now that the rates went down. I said, look, if you offer him that list price, because he's asking me, what if I offer this price? What's the payment? I'm like, bro, your payment just dropped $100 from what I quoted you at 1.475.
Yeah.
You offer 155, your payment is $100 less than what I quoted you for 1.475.
Right.
So you went up in purchase price, but your payment went down $100.
Yeah.
So he's like, oh wow, well, let me call my agent. Let me try to make an offer. Let me redo the offer because now the payment went down $100 less, and I can still offer at list, which is crazy. To think about it. So yeah, if you guys were on the fence, like this guy was on the fence, he's like, I'm not sure if I'm gonna be able to do that. 1.475 is my max in terms of payment. Call me back. He said, what it'll be at 1.55. I said, that's actually $100 less than what I quoted you at 1.475. So, hopefully we get it. I don't know. I have to, I haven't got that email that we're good, but
You're opening escrow?
Yeah, I gotta wait for the agent to call me, but at least we did the numbers last night before he went back and talked to her, and it's crazy. I was like, wow, you're actually gonna be getting it monthly payment wise, it's gonna be cheaper. So I would, if you already got qualified just a few months ago, even a month ago, call your lender, call me and say, what can I get today? And I'm guaranteeing you it's going to be
huge difference. I mean, it could literally make the difference of somebody qualifying on their own, because one of the things is usually first-time buyers most of the time they need a co-signer, right? So even if you are getting a co-signer, there is that opportunity to, like Bill said, maybe bid on get more house, and get the home that you want rather than settling for something now and using that as a stepping stone and then upgrading later. So you can use this time. Right now, there's really great opportunities to negotiate terms that are favorable to both parties, but also to the buyer to get them into the property of their liking.
Yeah, I think that, and by the way, Eric Garrett is asking online for information about Rob. I think you mean Rob Saul, Tzall. He's an attorney in Nevada. Eric just reached me offline, text or email. I'm BillGrossProbate.com. You get my contact info. I think that really Shannon hit it right on the head when he said that I don't think this is being discussed. I don't think people realize, and I think there's a reason why, that there's so much going on in the world, and I think during the election period, there's so much attention in the news on that, it kind of sucks the air out of other things. And so
everyone's watching the debates right now. No, there's no media coverage about the feds yet. No.
I do think that the rates are being pushed down by the government to protect government employees, because I think they read the tea leaves that if the current administration wins, they have jobs that are more stable. If they lose, they'll lose some jobs. That's getting the politics of it. But either way, it doesn't matter. The rates are significantly lower. And here's the thing: if you're already buying the house, just pay attention and take advantage of it. Now, if you're not buying a house, I wouldn't go out and buy a house just because rates dropped. I'd buy a house because it's time to buy a house. And by the way, while housing values have gone up, the payments have gone down for that same house maybe, and you're in the same shop. Or it could even be the same. It might be the pricing went up and the rates went down and the payment's the exact same. What difference does it make, right? Because you're going to live with the payment for 30 years or 10 years or however long.
Yeah, and at a 4-point-something interest rate, you're good for at least the first couple of years. And, Shannon, maybe you can touch on, because I bought my home with an FHA loan, and I only put $14,000 down. And that was the best investment I've made here in Downey. So I'm comfortable where I'm at.
14,000? Oh my God.
Yes, at that time, I bought my home for $400,000. It was a trust sale.
Oh my God. Okay, go ahead. Sorry, I
You're
I heard 14,000.
Shocked on the price, right? So
in Downey, the Beverly Hills of the 562 in Downey.
Yes, that's right. But
I'll pay you 20,000.
She ain't taking it. Let me help you with that.
it was
Go ahead.
something that for me to qualify on my own and get the home, in the area that I wanted was really important to me. And the other thing was I was able to refinance after maybe about a year and a half, and I was able to get rid of the PMI. So that's one thing that I know buyers look at is they get stuck on the PMI. I'm going to have PMI for, a year, 2 years, and it's going to cost me a lot of money. But the offset is the interest rate. You're saving money on the interest rate, and this is monthly. And once you reach a certain point of equity or paying down the principal balance, then you can refinance and get into a conventional loan. So what would that look like? Is it 80% of the loan to value?
Perfect. So it's two ways to remove the PMI. And also too, let me start off with this. If you go conventional, you are still paying mortgage insurance if you're not putting 20% down. It's
Right.
just you're not paying that upfront 1.75% that FHA charges. FHA charges a 1.75% that's financed. But if you go conventional at 5%, there's still mortgage insurance every month. It's not going to be as much as FHA, but you're still paying mortgage insurance every month. You're just not paying that 1.75% upfront mortgage insurance, but you're still paying every month. So in order to remove that, the two things have to happen. Either one, the property has to go up in equity. And if your loan to value, meaning that what your loan is now compared to the appraisal is 80%, right? So I'm just for simplicity numbers, if your property is worth 100,000 and your loan is only 80, you can take off that PMI. Or if when you bought it, if you don't want to refinance, that you want to keep with your current loan, there's something in there that says that once you pay it down to about 20% down, then you can automatically take it out. So that's that. And then also for those that are in it or in an FHA this year, you can, after I think 6 months, you can do an FHA, what's called an FHA streamline, which is you can keep your FHA but refinance to a lower rate, and it's a very much cheaper as well, because sometimes the same bank will do what's called an FHA streamline. It'll streamline the FHA process, and you can stay in the FHA and remove the PMI, so you can keep the FHA rate, because a lot of times when people refinance, they'll refinance into conventional, and now
Right.
you're talking
The rate's
conventional
higher.
rates will still the rate's higher, but the payment still works out to be less. But if you want to stay with that FHA rate, you can do what's called an FHA streamline, and we could go over that more in the next one. But yeah, those are the two ways. Either your property has to go up in equity to where how much you owe is 80% of what the current value is today. You refinance, get the PMI off, or you could wait until you pay off 20%, take off the PMI. Or sometimes you could do an FHA streamline, and if there's enough equity there, they will remove that mortgage insurance every month. So those are the three ways to do it. And then a lot of people ask me, when's the soonest I can refinance? You could, as long as you make 6 payments, you could refinance no problem. So you just make 6 payments, and if the rates keep going down, you can refinance there. I get that question a lot. When can I refinance? Now, is there prepayment penalty on conventional, on standard loans? When it's your actual house now, when it's your actual primary residence. Now, if it's an investment, that's a different story. But if it's your primary house, yes, you're not gonna, get that prepayment if you refinance.
Right.
If you wonder where all the lenders are at these days, they're all refinancing all the deals they did back in when was
That's
it?
what a lot of
November, October last year.
They don't even like the purchase business. I know loan officers that are strictly refinance lenders, and I know a lot of lenders that have got into the purchase game just because the refis aren't there anymore, and now you're going to hear less and less of that. So yeah, you're right. They're waiting on that refi boom, which more power to them. I definitely want to grow that purchase side, because the purchase it's kind of like, for us, the purchase is my version of a listing, because then I get the refi later, right? I think that's in the real estate world, right? For me,
Yeah.
the purchase, it's more rewarding too. I think it's a little more of a headache. You do have, on the lending side, you have so many people you're accountable to in escrow, but at the end of it, it's more rewarding. And then you get that long-term business. So yeah, I mean, you definitely want to get with a lender that's communicative, that's answering your calls. Because it's funny, I'm actually getting that now. Is a lot of lenders are kind of going MIA and not wanting
They're
to
loving life, man. They're all refinancing their customers from 2 years ago and then get ready to go on their Caribbean cruises.
Yeah. But the thing is if you don't take care of that purchase business when rates go back up, well, you're going to be again dead in the water. So
I think so. I think you're right.
yeah. Anyway, that's a whole nother.
For the buyers that were buying when the rates were at 8% in October, I mean, they can refinance now and get into a
For
6% rate.
I would definitely, if you bought last year, if you bought beginning of this year, definitely talk to a lender, talk to myself, whoever the case may be, and just see. I've gotten so many calls. Hey, if my credit's this, here's what my loan is. Give me a hypothetical scenario. We will for sure give you a free scenario. I'm not gonna ask you to check your credit to give you a scenario. I'm not gonna do that, right? You tell me, hey, this is where my FICO's at. This is how much I owe. This is the case. It'll take me 5 minutes to give you a scenario. So if any lenders out there is forcing you, that's another thing, forcing you to get your credit checked in order to get you a rate quote, you don't need to do that. Now, yes, and if it tells us you're serious, if you're willing to check your credit, but if you just want to get quote, that's not a problem.
And that's usually where people start. They want to get information first and see, is it going to be worth it before I have my credit pulled?
Exactly. So you can for sure talk to someone like myself if you say, hey, this is where my ballpark is. Now, obviously, if we do it and it's not the credit score that you're at, and just let you know, Credit Karma is not 100%. Okay, guys, Credit Karma does not give you. That is
Credit Karma.
Yeah. What
Credit Karma is bad karma.
Credit Karma is to lenders. Okay, like everyone wants to refer back to it, but it's not 100% accurate. I will take it for a quote, but I cannot submit that to the bank and tell them this is where your FICO's at. So, and on that topic, I think the last thing I'll say on that is hard inquiries, hard pulls. Everyone's scared of an inquiry, which, reasonably so, right? But let me just tell you this: is it gonna drop 50 points? No, it'll probably go down a few other points. But I'm telling you this right now: if you have to rely on those few points to qualify, you're in the worst position anyway. So, does it affect you? It can. It's only going to be a few points. I have never seen someone where it dropped 10, 20, 30. I've seen maybe 3, 4. But then again, how do you know where your FICO's at if you never actually check it? Credit Karma and all that stuff is not
reliable.
It's not reliable.
Well, they're in the business of selling you to their sources and charging more money in the middle, so it comes across as free. I think it's one thing if they're honest about it. To my way of looking at it, they're very deceptive. Yeah. And second of all, they're always promoting. They really work better for people with bad credit. They always promote credit cards, and
Oh, really? I didn't
get these credit cards. And get that. Credit card's nice, but if you pay your bill every month, it's not that big a deal in your life. The credit cards are very valuable to banks when you carry balances. That's really who they want, ideally. And so, and the scores are different. You think, oh, I'm going to check my credit. Credit Karma sounds great. They're so nice. They're so friendly. Not the same score to qualify for a mortgage. And you'll find that when they refer you to a lender, even those lenders will force you to get another credit score. But I think the other thing is that so much of personal finance has consumers scared. They always want you to not have information, and they have all the cards. It's like playing poker where they're looking at all 5 cards in their hand, and you're only allowed to look at 2 or 3. Well, how would you ever win? Right? And they don't look at the rest of the cards. The other cards are scary. Ooh, you might have a bad hand. Don't look at them. They're scary. Can we look? We're going to peek under your hand because they know what your score is. They know what information is. And so I think it's important as the number one thing for a consumer to succeed. Number one is take control of your own finances, and 2 is get educated and learn. And it's not that complicated. Your credit score, yes, you might lower your score by 2 or 3 points out of 720 or 730. And if it goes below the threshold, you can fix it. But don't let them talk you into not being aware. Don't let them talk you into playing poker with them and hiding 2 of your cards. It's just is not the path of success in the long run. We've been brainwashed into thinking that the bank is going to tell us the right way to go. They're not. They're going to tell you the wrong way to go. They're going to tell you the way to go where they end up making money. That's all they care about.
Yep.
Oh, wow. Am I in a soapbox today or what, huh?
It's okay.
Well, we're protecting the customers.
You know why? You know why it is? Because with age comes perspective, I think. I'm 65. I've been in this business since 1986. I've been in the business now for, 40 years, 38 years. And I think when I started, these big banks and institutions were part of the family. They're part of the community. They sponsored your little league teams. They were part of the community. Now they're just these big, faceless, disgusting corporate entities that make mistakes, and then you can never get anybody to fix it. And they're all focused on playing, some sort of trick on you. And I think the only solution for all of us, and I'm not saying therefore give up or therefore you can't win. The opposite, you can win by getting educated. And Shan's here to help you. If you want to know what your real credit score is with a real lender, talk to a real lender. He's real. He looks so good. You might think he's a model and a fake. He actually does loans for a living. We've actually done business with him. He what?
He's AI.
Yeah, he looks like he's AI, but he's not. He's really,
Right.
he's really a real human being that we've done business with, and so you can trust him.
And what I would say on that point, Bill, with me, I'm a loan brokerage, right? So I have we're approved with 35 banks. I'm not saying to go with me. You can even get a quote from me, and I get a quote from other people. That's not a problem. I'm not scared of that. It's like you said, get educated, get more information. The more value I present, the more people they resonate with it. And so, yes, ask the hard questions, right? What's my interest rate? Why is it? Another thing, is this the at par rate, right? Because a lot of people, and this is another thing, let's peel back the layers of lending. And I'm not scared to say this, right? A lot of lenders,
Let it go.
Right, they get,
Let it talk. Let's hear the truth. Let's hear let's do the 100 right now. Let's just do it.
With loan officers, a lot of people, well, how do you make your money? There is a loan origination charge, right? There's a loan origination charge. Now, some lenders will tell you, I'm not going to charge you anything, but this is the rate, right? But it's not their bottom. As a loan officer, we actually get paid more if we sell you a higher rate. We do. We get paid much more if we sell you a higher rate. The rates I give you is what we call at par, meaning that I make no money. At that point, we have a legitimate conversation. This is my fee. You'll see it. We can say, hey, is this fair? What's the situation? It'll be black and white. And so when you talk to a lender, ask them, hey, is this the best rate you can get? Is there any credit in the back? Because, once you charge, if what did I just quote? 4.875%, right?
Man.
If I quoted you a 5.5%, there's an $8,000 credit on the back end that I can potentially say is mine, right? Let's just say that. So when you're getting qualified, right, when they're telling you what the rate is, you want to ask, here's a little trick I'll give everyone that'll save you money. Is this your at par rate? Is this what you can say? Is this your at par rate? Meaning that, is this the lowest rate I can get from you guys? Yes or no? And if you tell whoever's watching, you ask your lender that, and just see what the response is. See what the response, because we legally have to disclose to you, right? There's a credit, what's going on. A lot of people lump it into different wording and figures, but you ask your lender, hey, is this your at par rate? And see what they say.
Just to show how dishonest the online service is, I love doing this. I'm going to do this one on my podcast this week. Here's Credit Karma. Oh, they're really nice, friendly. Though they're owned by Intuit, which I use QuickBooks, and I use MailChimp. So you go to the mortgage rates, compare the current rates. Now, Shannon, nice guy, but his company's only so big. He just said to you, they're approved with 35 banks. Shannon, if I said to you, for any individual borrower, how many different rate quotes could you provide, like on a spreadsheet of sorts? It'd be 35, right? Each of them offer a 30-year fixed mortgage to a FICO score 720 to 739 in zip code 770, whatever. There's purchase price. You have 30. You could be 35 quotes, but Credit Karma it's so funny. They only have 3. That's really weird. They have 5.99, APR 5.99, which makes it look as though you're going to pay no closing costs. Oh, no fees. That looks good. Let's compare, because I'm on Credit Karma. Let's compare the lenders. 6.125 New American. Now, New American's a legitimate company, and they're kind of paying for some branding, but their rate's higher. Now, would any customer pay $1,250 in fees to have a higher payment? Nobody would, right? Everybody's going to
I'll
get my
charge
quote.
you 6.25 and won't charge you anything.
No, my point is,
No problem.
between these two, would any customer choose New American if this is your choice? We'll call it A, B, C. A is Philo Bank, B is New American, C is Better, whatever. 5.99, 6.125, 6.65, zero fees, 1,250 fees. Is there anybody who's going to pick B over A? No, right? You see what I'm going at?
Right.
Everybody on this sheet, if they come here, are going to go to this, are going to go to the get my rate here, right? True or false?
Yeah.
Here's the thing I can tell you. You'll never get that rate unless rates go down. If rates go down, you'll get that rate. You'll never get that rate unless rates go down. You won't, because that isn't. They're going to come back out and say to you, well, you know, we can counteroffer you this or that. They're not in the business of giving you that rate. They're in the business of getting in leads going with you. They also know you're not likely to buy the house and be able to lock your rate for another 60, 90 days or longer. So they'll say to you, yeah, that rate's good for a 15-day rate lock. Once you've gone through all the machinations with them and give them your credit, give them all your personal information, they're going to say, well, yeah, that rate is good for the next 10 minutes. Are you buying a house and closing 10 minutes? Oh, you're not? Huh. That's a shame, because we could give you that. Our real rate today is 6.7 is really what that discussion looks like. It's just so deceptive. And they get away with it. Why? Because they're big enough to hire attorneys and to find regulators who make that possible. But here's what I tell you. You're never going to get that rate if you're buying a house today. If you're ready to close today, doesn't count, because they'll say, what? You need an appraisal. How long does that take? A couple weeks. A week, if they're fast. That could happen. So this whole system of this Credit Karma thing is such a lie. And here's the reason why. In my experience, I've been in this business, since 1986. It's because Philo Mortgage can go out of business and next week be Jones Mortgage, and you wouldn't know the difference. Or they could just change their name. And they could cheat people under that name. I'm not saying they have or do. I'm saying there are companies like them who had low rates, who today are still in business with a new name, and you don't know that new name is the same as the old name, because there's so many bad reviews under the old name. They just change their name and appear on Credit Karma, pay to be here. They're paying money to Credit Karma to be in this list. They're paying a referral fee or some sort of number, because it's not accountable versus having a human being like Shannon or me or Patricia, who, if you're not happy with the service, you're going to you would make our lives miserable. You give us bad reviews. You go to social media. You jump on this call and say, hey, Bill's a liar. Shannon's a liar. Nobody's doing that. My phone number's available. My reputation is critical. This is for businesses who are so lousy, they have no reputation, and want to buy it through Credit Karma. Okay, we've gone long here, Shannon.
The lead generator.
Those banks are probably open 9 to 5, Monday through Friday.
Yeah.
Right? If you can contact them. You have my cell phone. You call me anytime. I tell clients, even when you close your deal, you see something in the mail that you don't recognize, take a picture and send it to me. And I'll walk you through it. The transaction doesn't end for me when you fund.
It's common when buyers buy a home, they'll get something in the mail, whether it's from the supplemental tax bill. Even though we let them know there was going to be a supplemental tax bill, they get it 6 months later and they forget about it. They might get something from the old lender, from the previous owner, right? It might be a reconveyance or something like that. So there's always some kind of trailing mail that the new buyer will receive. So if any of that happens with any of our clients, they call us immediately and we help them figure it out.
Yep. I mean, even I had a client, we got him a house 2 years ago. They're like, our insurance is backing out. We can't do it. Okay, let me pick up the phone. Let me see what kind of insurances are available now. Let's get it going. How much did I charge? I didn't charge anything.
Right.
I didn't make any money off that hour and a half of work. But again, that's a benefit of
your client.
Exactly. I promised her, hey, if any issues come up, you call me. She's not as tech savvy, so she takes pictures of everything on her phone. Fine. And I'll do it for you. That's not a problem. So that's another thing about working with the loan brokerage. Now, there may be times where, hey, if you go with the local credit union, you go with this, they may have even better rates. And for me, I will support that 1,000%. because
But they
not
do
everyone's
charge
for everyone.
that rate up front.
Exactly, and that's the
And
thing.
sometimes
They say,
points.
oh, there's zero fees, but they're charging 1.5 more than you are. And I'm like, well, how about this? I'll charge you a point extra, and I won't charge you anything. Right? That
Exactly.
may actually it actually I make more money that way. I really do, because
Yeah.
with anyone, the good thing about where my company's at now, they're so flexible with what I can charge. If I see someone's really penny pinching, I'm not going to charge that much. Honestly, it'll be, you know what I mean? Hey, I've done deals where it's 1% origination, 0.7%, right? Like it for me, it's not about the money. It's about, hey, can I win your business over on the long run? So, you know, when you're talking to a lender, these are some of the things you should be aware of. You know, hey, how much are you charging, right? That's a conversation, especially now in this climate that we're at. If you have to pay for your agent or whatever the case may be, I get it. And let's have that conversation, right? Hey, how much are you charging? What's the situation? What's the rate? Is this the par rate? Let's have that conversation, and let's sit down. And if we have to meet, we have to meet and get that settled down. Because I know that these conversations are not always the easiest. You want to talk to someone. This is a big investment, and this is what I do all day long. So again, for anyone who's out there, this is supposed to be a resource for you, this show. And I hope, again, these little things, you'll be, like Bill said, more educated going into talking to a lender now, as far as, okay, this is what I'm looking for.
I'm going to do a segment on this topic. I'm fired up on this because I did my podcast last week was about the goal for the big corporations and government is to take the humans out of real estate. It's not going to work. Nobody's going to like that result we get there. Turning all the real estate agents into the post office isn't going to work any more than turning all the lenders. And most lenders have become like the post office. Wells Fargo, B of A lenders are like going to the post office for the most part. There's a 10% cohort within those companies are really good. But 9%, when you walk in the branch, you're going to get the 90%. It's like the post office. So,
Yeah.
Shane, I know you want to get off at 5:30. I left you. We got a little long here.
You're fine. I
Why
actually
don't you
got a
wrap
little fired
up?
up myself.
Good. Well, let's have some passion about this. I'm going to let you go wrap up here, or what last comments or ideas, or what do you want to talk about? Again, I went a little long here. I got my soapbox. I'm going to step off it for a second. Go ahead.
No problem. I would end off with this, actually. I've been having this issue a lot. You know, a lot of people are scared to have the hard conversations. You know, I'm seeing a lot of couples. They don't want to have these financial conversations. I have a lot of, groups, even I'm talking to kids right now that they want to actually, have this conversation with their parents, whatever the case is. I would tell you this right now. What you want is behind that hard conversation, or even knowing. A lot of people don't even want to know what their FICO is. I don't know. They're just scared. They're just scared to even pull back the layers and see. And so what I would tell you is, what's stopping you from buying that house and going to the next level of your life is that hard conversation. And you pair yourself with a professional like myself, like Patricia, like Bill, that know how to have these conversations, that are on your side. What you want is on the other side of that. So if you're watching this right now, have that hard conversation, pick up the phone, call one of us, and get going. Because I'm going to tell you this right now, if these headlines start coming out, if the rates start dropping even more, the floodgates are going to open up. And I believe there's still this window of rates are down, home prices haven't skyrocketed. So this is your sign to have the hard conversation.
Yeah.
Okay. Patricia, last comments, wrap up.
Yeah. So if you're watching this and you're seeing something online and it sounds really good, it probably is too good to be true. Just like that old, cliche saying. Interest rates, a lot of lenders right now, as we mentioned, are posting these fake rates online to get people to click on them and lead generate that way. They end up selling you on a different rate. So give us a call, and we can verify if those rates are actually going to be accurate for you or not. And this will also create that blueprint for you to know when you're actually going to be ready to buy a home. Do you need to save up a little bit more? Do you need to pay down your car loan a little bit? Those are things that we will guide you through. So give us a call for that.
Well, fantastic. And I'm Bill Gross, at Bill Gross Probate, social media, billgrossprobate.com if you want my contact info and reach out. We do this every Wednesday, 5 o'clock, sometimes 4 o'clock because we're busy and we got to move it earlier. But I know we're busy. I know Patricia's busy. I saw her yesterday at Orange County Courthouse. We had some fun together, right? That was like a party.
At the courthouse.
Actually, at the temporary courthouse in Orange County Probate is
Oh,
moved
okay,
out of
got
the
it,
main
got it.
courthouse in Santa
So
Ana
what's-
to the
What were you guys
Orange
doing at the courthouse?
at Costa Mesa for a probate confirmation sale, and
Nice.
we got our sale confirmed, and we're closing escrow on another property and moving forward. And Patricia and I are working on another one. We got into escrow. Do you even know we got Long Beach in escrow?
Yes.
Yes, we opened another escrow. So I know she's busy because I'm busy, and she's busy with like me plus more. So, thank you everybody. Check us out on social media, on Patricia's social media, on X. We have more people watching us on X than anything else. Kind of
Really?
interesting.
Okay.
Yeah, who would think? On my X channel. Guys, have a great week. We'll talk soon.
Okay. Thank you. Bye bye.